Now we're staring at a good 278-point fall in the Nifty futures. In fact, let's take it across to our experts as well and figure out what they're making of the market right now. We've got Rajesh Palvia joining in on the show, Jay Thakkar too on the technicals, and Sandeep Sabharwal on the fundamentals. Jay, hi, afternoon. If I could just kickstart the discussion with you. 19K breached, 18,900 as well breached. Where do we, or rather, how much do we fall next, and where do you see the next support coming in?
Hi, very good afternoon to you, Aisha and Nikunj. Well, see, as far as the current downtrend is concerned, of course, on the immediate basis, it looks quite oversold, and there can be some bounce back. But then that bounce back will be short-lived, is what I believe, because the medium-term trend seems to have reversed, Aisha, clearly, because the monthly indicators are likely to go into the sell mode with this. Next week when we have the monthly close, most of these monthly indicators are likely to close negative, and that would in fact trigger more selling pressure going forward. And one interesting thing, Aisha, which I would like to point out is that Bank Nifty has broken down from a clear double top pattern, which is a bearish reversal pattern. So we had that range of 2,500 points on Bank Nifty, which has got broken on the lower side below the levels of 43,500. So the next target below those levels comes to 41,000 to 40,000. That's the outlook for Bank Nifty in the medium term. So that would definitely add some pressure on Nifty as well going forward, and hence Nifty can correct until the levels of 18,550.
Sandeep, hi, afternoon. Are we just aligning ourselves with the rest of the globe, given the outperformance we've had in the past?
Yes, I think reasons for the corrections come later, but I think the view was that there should be some sort of correction after the euphoric up move, especially in the small and mid cap side, because when that kind of euphoria comes in and the kind of crazy valuations which IPOs were getting or are still getting, I think that's not good for the market. So I think that's the phenomena which is playing out. That said, my view was that since Nifty and the Sensex moved up by around 20%, so there should be a 10% kind of give up, because I don't see it going more than that. So I think now we are maybe 300-400 points away from that in terms of the Nifty. So that's what I think should be the worst case. I don't see it going below that. So in that context, after 3-4 months, this is now the time when markets are giving opportunities to buy, and people should start, whoever has cash should start allocating now and allocate till the end of November. That's my view. From December, market should be okay.
Let's get that list going. Sandeep, you almost axed your foot there. What is it that's looking ripe after the recent correction?
See, if we correlate how the results have come out with what's happened in the markets, the banks, the larger private sector banks seem to be better placed, especially ICICI and Axis. So I would think that those would be at the top of the heap for people looking to allocate on the large cap side. Reliance has had a good correction, so that could possibly look decent. Auto stocks still look good, although they have not corrected so much. And L&T has given up decent gains from the top, so that's something which can be looked at from the large cap side of the market.
Sure. Rajesh, hi, afternoon. Is it time to buy the fear already?
Yeah, good afternoon. So still we will wait to buy aggressively at this juncture. Let the rollover activity to happen, and then we will review what kind of rollover data is taking place. Till now, yes, Nifty is in oversold zone. Bank Nifty is now slipped below to 200-day moving average. So Bank Nifty is looking one notch weaker compared to Nifty, but Nifty might give some pullback action from here. 18,850 is the level where we are keeping eye. If we able to hold this level, then some pullback we can see, but not a big pullback. It could be around up to 19,000. That's the level where again it's a steep resistance for the market. At this moment, we are focusing on two stock, one on the long side, one on the short side. From long side, Puravankara is looking attractive. In corrective move, almost stock has taken the support from its 20-day moving average, and now again we have seen again buying action in the stock, and the stock is showing recovery sign. Overall structure is bullish. Stock has formed a series of higher top, higher bottom formation. So overall, we believe that Puravankara can show some uptick from the current level, and I think one can buy this stock for upside target of 155. One can keep stop loss of 133. On the short side, Piramal Enterprises is looking weak. Now stock has given a breakdown of 100-day moving average, and looking at the rollover rate data that is on the short side, and we expect that furthermore follow-up selling we can see in Piramal Enterprise. So on the downside, we are projecting a target of 915 for November future. So one can take short bet in Piramal Enterprise with stop loss of 964. Downside target is 915.
Sandeep, if you're of the view that it's a matter of, this is like a stumble, this is not even a pause, what gives you this confidence? Because if I look at the sum total of numbers, with the exception of banks, Sandeep, we've not had any big upgrade, any big beat, any company which has really spoken great things about the earnings outlook. So if the earnings are just about in line with estimates, then where the trigger will come from?
See, Nikunj, only two big category of companies have reported. In terms of, if you look at the bigger categories, you look at banks, financials, and IT. So IT has been more or less a whitewash. And that was expected. So there are many people who are still bullish on IT, but I think 2024 could be even worse than 2023. So that's one big segment of the market I'm not looking at. But financials, I think, have done very well. On the auto side also, there have not been much results, but Bajaj Auto results are very encouraging. And I think across the board, we'll see decent results from auto. Many other companies might not have reported good results, but that's also due to a shift of the festival season from this quarter to the last quarter to the current ongoing quarter this time. So many of the durable, etc. companies will see more growth this year. Now, from the Indian context, I believe we do not have issues related to fiscal deficit. Inflation is reasonably well controlled. Current account deficit issues are not there. Rupee is stable. And the growth outlook is pretty decent. So I think there are parameters. On the macro side, I believe India is very well placed. And in that context, these sort of corrections will come, but there will be opportunities to invest.
You got a 1.3% cut on the Nifty and 250 points down on the Nifty. Thakkar, for somebody who's looking at Nifty, the news is that we've had a breakdown and a market which was flat has now become oversold. So are we nearing the end of the pain, or whatever we will see in the near term could just be a technical bounce and the way is actually down rather than up?
Right, Nikunj. Yes, overall, I would say the trend has reversed from up to down, and in the short term, as you rightly said, things look a little bit oversold. Of course, if you look at the derivatives data as well, I mean, out there the PCR is looking quite oversold, and there can be some good technical bounce back. But yes, that technical bounce back should be sold into. I think that would be a temporary bounce or a dead cat bounce, I would say. And once that gets over, we'll again see the downtrend resuming. So whatever bounce we see from this oversold territory, whenever it comes to say maybe 19,000, 19,200 range, that is a good range to again go short on markets, because I believe that on the upside in the short term, 19,500 is a very clear resistance, and which is almost 600 points away from now. So on the short side, the risk reward is not that suitable right now, because we are targeting say 18,500 to 550, which is 300 points away, 350 points away. So that risk reward is not matching right now, is not favorable right now. But yes, if at all there is a bounce in the range of 19,000 to 19,200, there it will offer a good risk reward to go short again.
The small cap index, hello, has recovered 3% from today's low. So a crack and the recovery. Now let's look at some stocks here. The ticker team will fire it. Recovery in Suzlon from the day's low. Recovery in MCX from the day's low. Recovery in Bombay Stock Exchange from the day's low. That's BSE. We are used to saying BSE, so it's actually Bombay Stock Exchange. Suzlon has recovered about 4-5% from the day's low. BSE has recovered 13% from the day's low. MCX has recovered also quite smartly from the day's low. So recovery has actually started kicking in. Recovery has started kicking in very, very smartly from the day's low. Sandeep, it's always NSE who's called as the big dada of Indian stock market. But the real price performance this year actually has happened in Bombay Stock Exchange. In a matter of days, the stock has gone up by about 3x. Do you think this is just hot air or something fundamentally has changed in BSE? Your smile tells me that वहाँ change नहीं हुआ है.
No, see, NSE is not listed, so the only stock you can play is BSE only. So that's why it's gone up. If NSE was listed, it would also have gone up. Now the point is that, see, in a duopoly, ultimately both players should ideally be doing well. And it's a matter of time when one catches up vis-a-vis the other. And that's what is playing out in many companies where competition is limited. So BSE, so these companies have secure market shares, reasonable profit, not too much to invest. So these are kind of stocks. So BSE was neglected because people thought that everything NSE is doing right. Then eventually people realized that even BSE is doing some things right and they'll also be much more profitable. And that's led to this re-rating. Now, whether it will keep on going up like this, I think unlikely, because now the valuations seem to be extended. But longer term, it should still do okay.
Good to have you on the show. We'll let you go on that note. Glad that you could take time out and speak with us as always.